What's up, guys? Hey, it's Clint Coons here. And in this video, we are going to talk about mid-term rentals. You're going to learn how you can take a normal property and you can generate $30, $40, $50, $60,000 a year renting it out, and what the tricks are and how you can go out there and find these tenants, people who are displaced because maybe a man-made disaster or a natural disaster. This is a whole different area of real estate investing that I didn't even know existed. But I've got an expert on we're going to be talking to today who's been doing this, and she's going to share with you the secrets to maximizing the midterm rental space. Okay, let's get started. Dr. Rachel Gainsbrugh, thanks for coming on. And why don't you, before we get started, why don't you tell everyone a little bit about your background, because you're a doctor, you're in short-term rentals, medium-term rental space, real estate investor. I mean, it sounds you got a lot of balls in the air, so I'm sure people are going to wonder, how are you putting this together?
I know, right? But I thank you so much, Clint, for having me. And thank you for the content that you're putting out there, the education that you're giving the community, because it's so needed. You have a lot of busy professionals out there who are looking for another way to stop exchanging their hours for dollars. So I just can't thank you enough. But a little bit about me. I'm a little girl from Haiti, which is the poorest country in the Western Hemisphere, south of Florida, and raised in Miami. And I knew from the very start that I wanted to make an impact. I wanted to figure out a way that I can help others. And so I went into the healing professions, but I quickly realized that the healthcare burnout is real. Walked away with a ton of student loan debt. My husband and I, we worked our fingers to the bone trying to pay it off. But eventually, when we got to the other side of it, we decided, you know what, we need to find a way to essentially stop exchanging our hours for dollars. We need to find a way to work smarter and not harder, get our money to work for itself. And that's how we really landed on real estate investing.
You know, when you landed on real estate investing, though, you took a path that I think that not a lot of people will start off with, right? I mean, most people start with long-term rentals, and I know short-term rentals are a popular area in the last couple of years, but you kind of went all in. And so what did that look like for you to take that leap and not go the traditional route?
Yeah, so I wanted to be really intentional because when we were, paying down student loan debt, we essentially had burnt the candles at both ends. And so being intentional was really determining, which investment strategy is going to give us the best bang for our buck, while simultaneously not putting us in a position where we just bought another job. That's what we did not want to do, is to buy another job. So I got really laser focused on what does this really entail? Not all of the marketing hoopla or anything like that. I really went out and spoke with the individuals who were, say, wholesaling or fix and flipping or long-term tenants, the ones that were really doing the thing, multifamily syndicators. And I asked, let me see what the balance sheets are looking like. Let me see what the level of effort is really looking like, And I consumed a lot of podcast content like yours, Bigger Pockets, all of them, just to, really evaluate what does it look like really behind the scenes. I wanted to peel the layer there. And although short-term rentals, yes, there was a lift behind the scenes, but the numbers definitely penciled out. The balance sheet was looking really good. And when I niched into the luxury space, it was really, really lucrative. And I said, you know what, this is how we can potentially work smarter and not harder and create revenue streams that, would exceed any of the other investment strategies that we were familiar with at that time.
Now, as you were talking about, you moved into the luxury space. And again, you picked a niche and that's where you went. And I think that's important for anybody who's going to get started in real estate investing. Find something that you identify with and you feel like you can, monetize it, and it fits with your lifestyle and how you want to invest in real estate. But what's so interesting is that you started this route and then you recognized that there's another opportunity out there in this midterm rental market. And you're the first person that I really saw that was starting to capitalize on that, as following your channel and your website. So could you explain to us, what is the midterm rental?
Yeah, so the midterm rental is a rental that is not a long term where you have a tenant for 1 year. It's not exactly a short term where you have a guest for 1 or 2 nights. It's in the middle, so hence a midterm rental. And the midterm rentals are 30-night stays, around there. Could be 3 months. It just depends from a legal perspective on which state we're in. But about 30-night stays to about a 6 month stay is considered a midterm rental. Now, what's interesting, Clint, is that there are so many different avatars or potential guests that would need a midterm rental. Say someone is coming to the area to train at a local military base just for 30 days. They're on a special assignment that they would need a midterm rental. Or say it's an executive who is coming to, be interviewed for a high level role, a CEO role, and it may take 3 weeks and 4 weeks for him to go through all the processes. That's, a midterm rental. That's someone who needs a midterm rental. So at I want to say during COVID, a lot of our first responders would travel to different markets and rent out midterm rentals. Our travel nurses, they rent out midterm rentals. They're typically on a 13-week contract, which they often renew if they're going to stay on assignment at that particular hospital. And so, although we don't cater to travel nurses, but they're the biggest population of midterm rentals as it relates to what's most common in that conversation. So for us, since we have luxury homes, luxury single family homes, some of which are in destination vacation areas, and others are in suburban areas outside of metropolitan areas, those actually cater to individuals who are displaced from their home due to a weather related disaster or a man-made disaster, unfortunately. So unfortunately, if your house caught on fire, well, you would need a place to stay with your family, for 3, 6, 9 months, depending on a supply chain, depending on, the contractor's schedule. Sometimes, we're kind of
Train derailment and chemicals are spilled everywhere.
absolutely, absolutely. So those individuals who are displaced for whichever disaster, they would need to take advantage of a midterm rental as their home is being restored or as the area is being rebuilt.
Wow. So you have taken your luxury homes, and so
Mhm.
maybe you could define for us what is a luxury home from your perspective for this type of market.
Yeah, so what I love about this asset class, like the short-term rentals and luxury, what I love about it is that modern luxury is not going to be, it's not your grandmama's luxury.
Yeah.
I don't know if you remember watching Lifestyle of the Rich and Famous with the gold
Hmm.
door nose. No, it's not like
You're
that.
dating me now. You know that, right?
Yeah,
Robin Leach.
I know, I know. Oh my goodness, I used to just watch that. But
Mhm.
modern luxury is really different than traditional luxury. So ever since the Industrial Revolution, the actual accumulation of things, the possessions, and being able to, order something and it gets shipped to you from afar. Well, that's not as luxurious anymore. Like you can grab something off of Amazon, it's there this afternoon, and I can grab the same thing. So it is not the accumulation of things, especially with the avatar that's traveling now, the millennials, the Gen Zers. They want to accumulate experiences. They want to accumulate unique experiences. They want to live like a local. They want to connect with nature, reconnect with those that they're traveling with. So the beauty of the current and modern luxury travel has more to do with uh, the journey, not just the destination. So it's all encompassing, which is great. Of course, there are some tangible items as well. The default travel luxury bed is the king size bed. We want convenience, keyless entry, check in and check out. So those are some of the kinds of things. So if you can create and curate a space where they can connect with one another, where, it exemplifies experience, where there's great curb appeal, you're able to really create something special. Now, there is, of course, ultra luxury, which is okay. You have the butler and the airplane pad. We have a house with the hanger. Okay, so that's
Wow.
ultra luxury,
Yeah.
but it doesn't have to break the banks because modern luxury, it's about, can I put together, dry goods for a recipe and they're having a local um, popular dish, because you were thoughtful enough to put those things together, which is absolutely amazing.
Those
So,
like little touches that you're
the touch,
adding.
yeah,
Nice.
yeah,
Yeah.
yeah,
What about the houses though? So I'm curious. You see a lot of people who will look for homes that have a lot of bedrooms in them and a lot of bathrooms because they're trying to, they cater to that. Oh, well, we can get 12 people in here so we can charge more for it.
yeah.
What do you look for in your space and when you're advertising, the midterm rental? What does that look like? Is it a 3-2?
Yeah. Yeah, at least. I would say at least a 3-2, but I like a 4 bedroom plus, because a lot of time for this midterm rental avatar, which we cater to, which is a family, a larger family, a lot of times if you go small, you're then competing with the REITs because they have all these tutus and they can stand it up in 24 hours, put some rental furniture in there, and because they have that infrastructure and the agreement with the temporary housing agencies that work with your insurance companies, your Allstates, your State Farm. So that's already in place. So how do you live in that blue ocean and you're not fighting with, the feeding frenzy in the red ocean with the REITs that have what 200, 500 doors, depending on which market you're in? Well, the way that you outperform them really is the asset class. You want something that they would not be able to produce in volume, which are 4 bedrooms and 5 bedrooms and 6 bedrooms. And so that's how you will typically stand out from the crowd when it comes to catering to this particular avatar. However, if you're catering to a travel nurse, they typically want their own private space. So understanding walking a mile in the shoes of your potential guests, they want, their own space. So 1 bedroom if you have a guest house or, a carriage house, a casita, blackout blinds, those individuals, the travel nurses or the travel respiratory therapists, and, there are several different first responders. They're going to want their own private space. So a 1-1 guest house is what they would prefer rather than staying in the REITs.
Wow. So yeah, I mean, that'd be the best of both worlds, right? You find one that's got the 4, 4, 5, 4, 6, and then you've got a 1-1 out on the back. You could really double down on that.
Yeah.
So do you find the people that, like you said, the avatars, right? Who you're trying to determine. How do you find those or target those avatars for your properties?
So what's great about it is it's really the other way around. My avatar dictates, the asset that I'm looking to invest in. So if I know that my avatar is myself, which is me, I travel with my husband, his siblings, and their children, and their spouses, and my siblings, and grandma and grandpa. So I'm my avatar with like 2 dogs and a strange cousin that makes it to the vacation every year, right? Pops out of nowhere, it's like, oh, you again. Like the timing on it. So if that's my avatar, that's who I decide to serve. Really, smooth luxury studio in the middle of it, in town, that's not going to be the property that I'm going after. Okay, so that it really informs which types of properties that I'm looking to invest in. I'm looking for something that has a little bit of a spacious backyard, something that's going to have a vibe. Depending on the actual market, a hot tub, a swimming pool, those are some of the things that are very popular, but it's very market dependent.
What I hear you saying is that you're looking for something where you would want to stay, where you would bring people, because
Mm-hmm.
the avatar is someone that's going to have themselves possibly invite other people to stay with them for a while they're in that location, because they're going to be there for a longer period of time. So they want that sense of family around them that they would have when they're in their home. Is that
Yes.
your
Yeah.
generalization?
Yeah, so that is my avatar. So our properties I call them hybrids. So
Hmm.
those who are visiting the area for a big family wedding, who need it for a couple of nights, those are my short-term rental guests. So our properties work for that avatar, and those who are actually, displaced from their home for a longer period of time. I had a family of 10 who
Oh.
were coming out of an 11-bedroom home although ours is 6 bedrooms in this particular market, but we were the only ones, Clint, that could really host them. So yeah, we love to serve the larger families for the displaced um, homeowners, as well as the larger families for vacation rentals as well, those who are visiting.
Okay, so I got some questions on that, but before this came to mind. You said travel with your animals. So do you make that all your properties are pet friendly so people can bring animals to the properties?
Yes, I started off, I was not pet friendly,
Hmm.
and I realized quickly that I was leaving a lot of money on the table. And I would highly recommend if anyone is not pet friendly, they may need to consider that. So imagine if something happened to your home. Are you going to board Fufu for 6 months while your property is getting ready? Like they're a part of the family, they truly are. So I was like, okay, I'm luxury, I'm bougie. We're not going to be pet friendly. And you know what? It didn't work out.
Yeah.
Yeah. And so we kept getting asked again and again and again, can we please bring food? And what's great about this asset class is you get to interact with your potential guests, and they make it known like we can't find anyone who's pet friendly. And so, as I spoke with the temporary housing agencies, they said that pet friendly is the number one amenity that they need. 80% of their homeowners need pet friendly accommodations, and only 10% of hosts are willing to offer it. And so we turned on the flip on pet friendly, and we were able to increase our revenue by 30%. We're already doing well. So an additional 30% for being pet friendly and being one of the only ones in our market. Now that I just spilled the tea, your audience knows my secret sauce.
There it is. Well, where do you draw the line? Miniature horses, ostriches? I mean,
I only look, my favorite are just dogs. I don't even like cats. I'm like,
no
oh my
cats.
gosh. Oh my goodness.
Oh, my
Sorry for
partner,
all
he's
the
not going to
cat
be happy
lovers.
when he watches this video. He's well, we're both cat lovers. He's got a cat named after me,
Oh,
and I have a cat named after him.
I'm dead.
Yeah.
I'm so dead. That is hilarious. Yeah.
Yeah. Well, I felt bad. My daughter, I'd lost a cat that I was really attached to, and she bought me a
Oh,
new one. And I said, well, what are we going to name it? She goes, I don't know. Why don't you name it after your partner, Toby? So we called it Toby. And I felt bad. So I went and I bought my partner a cat for Christmas, and I put a little name tag. I said, hey, here's Clint. You can have Clint now.
and Toby.
Yeah, Clint and Toby. But
That is
yeah,
awesome.
that's interesting because, one of the things that I do recognize sometimes is, that people do want to travel with cats, and because you
Mhm.
see them on airplanes and things like that, but you draw the line at that, just dogs only.
No, I allow cats.
Oh, you do?
Yeah, I
Okay.
don't love it, but I allow
Yeah.
cats. I can't be discriminatory towards cats.
Yeah. Great. All
Yeah.
right. So if you're thinking about this,
Mhm.
we've talked about the properties, what you're typically looking for, but what about the markets? All right. So if I'm thinking about midterm rental, I have properties in certain markets right now. How do I know if that's the right type of market? If I was going to make this switch, or if I want to start investing, where should I look?
Yeah, that's a great question. And I would say, as long as there's disaster and weather related issues, you probably are going to be primed to be open to serve this population if you listed on, the platforms. If you're wanting to serve this population, you can list it for a 30-night minimum. You will be primed. The markets that I see that aren't very good for midterm rentals are markets that experience extreme seasonality, such as like in Avalon, New Jersey, that's open probably 12 weeks out of the year. You have nothing but, second homes. The primary homeowners have a primary home. So if there's a disaster at this beach home, well, they have a primary home, right? So those are the markets that where I have seen that this strategy does not work very well. I may be wrong, but I haven't seen it work well in those types of high seasonality markets. Outside of that, as long as there's density in a market, there's an opportunity. So if you're living on farmland also, and you have like everyone has 500 acres and the neighbor's like 500 acres away. Well, you're not going to get a lot of, inquiries. But if you're living in a suburban area, or if you're living, in an area where there's quite a bit of density and there are quite a bit of primary homeowners, this is a strategy that I have seen that works well. And what's great about it is it pays very well, and because your temporary housing allowance is a percentage really of the rebuild value of your property, anywhere from 20 to 30%, generally speaking. I have seen higher, which is really nice, and that's per year per claim. And yeah, so as long as there's density, there's weather related issues. You just mentioned the trail derailment a little bit earlier.
Hmm.
There's man-made issues, unfortunately. Some of these areas, I'm my own patient right now. I have a pipe that bursted, right? So it's like it keeps happening everywhere. Everywhere you turn, there's a pipe that's bursting. A fire, unfortunately, a fallen tree. Those are the main three, um, uh, quote unquote, catastrophes that we uh, were able to host for throughout the area. And so you get to help someone in your community and get a nice payday as well.
So then what I'm hearing is that with the midterm rental, unlike a short-term rental per se, is that the typical avatar that people are going to be renting from you a lot of times come from a certain possible radius because they've been displaced and now they're going to drive 70 miles and stay at your house, your property for 30 or 60 days. Is that my interpretation, or do I have that wrong?
Um, it's yes and no. I would say no first because typically, if it's a family who encountered, say, an accidental disaster,
Hmm.
in order to keep their lifestyle and their way of living as close to what it is now as possible, they want to keep the kids in the same school. So the radius
Oh,
is going to be the
yeah.
school district, within that same area. Now, if it's a, level, and I don't work for FEMA, but it's like the highest level catastrophe and an entire area is wiped out, then, they would have to go further out. But I would say for most of our markets, it's the first one and not the latter. So it's a fallen tree. It's I went on vacation. I came back home. The washer was on, and unfortunately, it wasn't hooked up in the back, and it's it's a swimming pool inside my house. And I was on vacation for 3 weeks, and we're starting to see mold. So those types of accidental disasters happen more frequently, but we are seeing some weather, an uptick in weather as well. But accidental disasters, like, oh my goodness, yeah.
Yeah, one of the things that I found that I like to put in the properties, mowing
Yeah.
has
Hmm.
flow by mowing. It is phenomenal. Not only that, it monitors, whether or not you're using a lot of water, if you left sinks on, things like that, and it'll shut
Hmm.
off automatically. You get an alert, hey, your property here has it shut off on it. You're like, well, hey, what's going on over there?
Hmm.
That's a pretty
It's
cool
great.
feature.
Yeah. Most homeowners, they don't have that. They're
Hmm.
just like, yeah.
Yeah. Well, so then, all right. So that kind of plays into what I was thinking then, which means that if I have an existing, long-term rental property, then I could consider that turning that into a midterm rental property, and so I'd want to reposition that. And so what I heard you say is that you still advertise on the VRBOs and the Airbnbs and things like that, or is there a different website that is geared specifically for midterm rentals?
Yeah, so I personally still advertise on Airbnb and VRBO. For those who are looking to host travel nurses, they're typically looking for properties on a website called furnishfinder.com. But in addition to VRBO and Airbnb, I also list on a website called corporatehousingbyowner.com. That's corporatehousingbyowner.com. That's where a lot of the insurance temporary housing agents, they look for properties as well. And then there's another one, ALE Solutions. That's ALE Solutions, and I'll give that to you too, Clint, so you can add to the show notes. Yeah, you can just list your property and register it there. I will say there is an investment with the corporate housing by owner. I think it's like the baby plan is like 300, and then it goes up to 900, but it's worth it to get the baby plan because one booking will more than cover that. It's definitely worth it.
Well, you just gave me the lead into my next question. What
Oh,
does the money look like for a midterm rental versus a short-term rental versus a long-term rental, as far as that cash flow?
I love this question. And not only I call it my ROI, but also my ROE. So which is my return on energy, right? So there
Hmm.
are a number of different types of midterm rentals. And so I just want to break it down a little bit. If you list your property on furnishfinder.com to host travel nurses, my sister's a travel nurse, hey sis, and she and she is very frugal, which I get, right? So she's out there fighting for her life, and so every dime that she makes, she wants to bring home to her son, her family, to pay her mortgage. So she's looking for, a nice, safe home. She's a little bit bougie too, like me, a nice, safe home, but she doesn't want to break the bank on it because she needs to take you know, a lot of that revenue and bring it home. So I would say the travel nurses are going to be your most frugal. You're not. You might as well consider it close to long term rental if just maybe a little bump.
Hmm.
That is one type of midterm rental. The revenue is not great there. Now we have other midterm rentals also. We have those who are relocating. Have you ever seen an individual that sold their home and they can't quite close on the next home quite yet?
Hmm.
Well, that's a midterm rental situation. So that usually falls under the relocation or home is in escrow midterm rental. And I would say the revenue on that is going to be better than the travel nurse, but not by that much, because they're in that dicey period of uncertainty. And there are other midterm rentals as well. There are government contracts. There's higher education. The revenue on the government contracts is pretty nice. But the level of the ROE, the return, the level of effort
Yeah.
to get into those is going to be quite high. You have to have, cybersecurity on your website, like a lot, it takes
Oh,
a
wow.
lot to get up and running with those. And you have to bid and you have to be certified a certain way or registered a certain way. There's like 7 things and it takes some time and it's well worth the effort, especially if you have the time capital. But if you're working a full-time job, you have a whole husband and 2 kids and 3 dogs, it's like,
That can be demanding. I know.
be a bit
My wife told me that
demanding.
many times. Yeah.
Absolutely. And so those are some of the other midterm rentals. So those can be lucrative. Military families, not so much because their stipend is based on the
Hmm.
GSA rates as well. But this is why I like the temporary housing agencies. The insurance companies, they saw a $1 trillion surplus in 2021. Their pockets are very deep. And so if you're living in an area where the property values are, healthy, and the land values are, moderate, the rebuild value is whereabouts the percentage for the temporary housing is calculated. So say the property value is 400K and you're at 25% is the loss of use coverage. That's 100K of temporary housing allowance for that one incident per year.
Wow. Yeah, so I understand exactly what you're saying when you talk about the ROE. I myself, I dabbled in the short-term rental, bought a place in Hawaii, and after a year and a half, I dumped it. I said, I don't have that energy to put into dealing with people, every 3 days, 7 days. It was just too much.
Yeah.
But I can see that for people that don't want to do the short-term rentals, but they want to make more money
Yeah.
than they are in the long-term rentals. And I think one thing that hasn't been identified, because I haven't really asked a question but I see this here is that sometimes, when you're thinking about getting paid, right? Dealing with these tenants, I imagine it's not hard to collect because it's probably on credit cards, run through the site, it's all paid up front.
Well, your tenants, you have two tenants actually. Technically, the insurance is on the hook on the lease as well.
Yeah.
So they pay. I get checks from the insurance companies.
That's just
Which is
awesome.
lovely. Yes.
Yeah, I know. I was meeting with a client yesterday, and she was explaining to me that, the to evict someone right now, it takes about 6 months to get someone out of a property here in Washington State, and how frustrating it is. So when you get all that money and you've got guaranteed, that's phenomenal.
Yeah, so
All
I
right.
got a text message from one of the members in my community where
Yeah.
I shared the strategy yesterday. He got one. He got his first check. It was $29,500
Wow.
for a 78-day stay in Wisconsin, which I'm like, isn't that like the middle of nowhere?
Yes.
It's like cheese and in Wisconsin, mortgage is 2,200 a month. I'm like, nice.
29,000.
I got another student that hers was 89,000 net. She's been hosting a family for from May to December. Her net after her mortgage, which was $1,800 in Georgia, it was 89,000 and some change. I forget the rest of it, and it's like it's transformative
Totally.
for them. It really is, and for her, she's a teacher, so she said I made 3x my annual salary with this strategy, and I absolutely love it. I mean, I love it.
I, you know, your website, short-term rental gems, right? That is the
Short-term
name of the
rents,
site.
yes.
Yeah, short-term gems. I've got a link down below. Now, you start talking about the people in your community and your students. Can you explain to them, what you do on that side? Because you have so much information out there for individual investors.
When I was growing up, Clint, I we didn't sit around the table. I was like latchkey, right? Mom and dad, they were working. They were my parents in Haiti. They were doing well. Then when they came here, they were working factories and cab driving, and we didn't have those talks around the table where this is what a 1031 exchange is. This is what a bonus depreciation and cost segregation. We That wasn't happening. So we were not set up that way. Financial literacy was not a part of the conversation because there were not no finances really to literate upon. Is what I like to say. And so when I started to show up in these rooms and to be in communities where these conversations were the norm, I learned as much as I could. And I decided, I'm going to bring it to my community of other individuals who are like me, who did not, experience this, who were just like me and just grinding it out. And so I have a Facebook community where every week I go live and I share, I train, I interview, others in the industry, whether it's a tax strategist that's just going to show you how to ditch the burnout culture, get a little bit of
Hmm.
margin and breathing room, because what we learned was get your education and work your fingers to the bone. And there's another way.
Absolutely. And you train as well
Yes.
on individuals how to create midterm rentals, how to build that business out, correct?
Yeah, I do. I do. Every quarter, I hold a live workshop. It's a 2-day workshop where I make sure no question goes unanswered. And so I hold everyone's hand from step by step to baby step, wherever you're at. Like you, Clint, you say you have long-term rental you might want to reposition. Great. Some people have nothing to start with. Great. Let's start with where you're at. And so if you tap into my community, I have a free list, 75gems.com. Once you tap into there,
Great.
I'll definitely connect you to all of the other resources.
Well, awesome. I want to thank you for coming on with us. I mean, your story's fabulous, and all of those links, they're in the show notes. Guys, hey, listen, if this is something you're considering, or if you have never heard about it before, go get educated. Click those links, go to her website. As she's been telling you, there's a ton of information. I've been through the site, and I would say it's a bit transformative because it changes the way we look at our real estate and our investing and what we can do with it to make more money. As I mean, those checks that you were talking about, I'd
Yeah.
love to be bringing in a check like that off just one property for 6 months.
Yeah, and I want to add also for those who may be facing regulatory restraints as well. This has been the answer to a lot of the members in my community who are concerned that there's a new regulation that's coming down. There may be a ban or a limitation on permits. So these 30-day stays are something that I think everyone needs to be thinking about as well, and putting an extra tool in your toolbox.
I know I'm going to send the link to this video out to, I know one of my clients, she's a physician, her husband's a physician, and they are closing on some property, some townhomes in Dallas area.
Oh, wow.
In
Yeah.
that, which she didn't know,
Oh my
because she
God.
was going to use short-term rentals for these properties.
Oh my
She
God.
didn't pay attention to the CCNRs that limit it to 30 days, minimum 30 days.
Yeah.
And we'd had that discussion, and the midterm rental discussion, this was a couple months ago before I started following you, didn't even cross my mind. And
It
she's
can
definitely
save
going to
that
look at it.
deal. It could literally save that deal for her. You're right.
That's exactly right.
Yeah.
Yep, that's it right there, because that's what she was planning to do, and this is, I think, really going to help her. Thanks for coming on. Anything you want to leave in passing with everyone who's been watching?
Oh, thank you so much, Clint. Just everything is figure outable, right? Whenever we face an obstacle, there is a way around it. There's a way through it. Just keep tapping into your community. Keep tapping into, those who are doing the thing. And there's definitely a way to figure out how to take your next best step.
Great. Well, thank you.
Thank you.